Buying your first home will definitely be the hardest, but it might not be as hard as you think. Corey, let's talk about why.
Welcome back to the Innovator, the Imitator, and the Idiot. I'm Corey Martin here with Edge Home Finance in Denver, Colorado.
And I am Kyle Wong with the Moxie Real Estate team here out of Colorado. And as always, if you'd like to get in touch, reach out. Use the link below. Schedule a call.
All right.
Let's get right into it.
Yeah, let's jump right into it. So, when we're talking about getting into your first home, there is a lot to be concerned about. There's a lot of worries, a lot of fear, a lot of anxiety. I think there's a lot of funny memes on the internet about affordability, right? But also managing the yard. I think is hilarious too, because so many people I think in our age group are living in apartments and whatnot, and so
I'm not trying to cut the grass.
Yeah, you know what I mean.
Yeah.
But then there's also other people who are super excited about it too. So I actually align with those people. I would love to be in my Nike Monarchs, cutting the grass Saturday morning. I would have the best mustache in that scenario too. I'm just
barbecue at 6.
Oh, it, man. With the best jorts you've ever seen, creased, because you know where I'm from. You know what I'm saying? With a nice line. Oh man, with the Nike Monarchs and the best mustache. I'm thinking about this. I have this vision in my mind. Of
it's exciting.
Yeah, it's exciting. Cutting the grass and Nike Monarchs and cornhole and Bud Light and being very intense about my bratwurst. But that would be I would be a first time home buyer in that scenario, and I'm thinking about what life would be like and what I'd be worried about, and it's the first thing would probably be that down payment.
Yeah, down payments are super scary. I think that's probably, at least in my experience, one of the biggest reasons people don't get into homes, because they say maybe monthly payments I could swing, but isn't it really expensive with closing costs and the down payment for the loan, all that stuff. The good thing is I know there are options.
Yes, you have tons of options as far as your down payment goes. I know here in Colorado we have two awesome programs, several other programs, but the most popular programs would be Metro, DPA, and CHAFA. These are down payment assistance programs that, just like it sounds, right? They're assisting you with your down payment, right? So both of these programs, or CHAFA's down payment program has been around for 40, 50 years now. Same with Metro DPA. They've been around for a long time. They've helped so many people, thousands of people get into their first home. And again, it's down payment assistance. What it is you have to qualify at a certain amount, right? So down payment assistance isn't for the guy who's bringing home $200,000 a year. All right.
But if you're bringing home $200,000 a year, let us know.
Right. We definitely want to help you get into a home. It's just that you probably wouldn't qualify for down payment assistance. It's not for, people that are really looking to house hack. Right. So, down payment assistance isn't for folks that are looking to use multiple units, and then go off and, to purchase a fourplex, live in one of them and rent out the other 3. Down payment assistance isn't for that. It's genuinely for people that are looking to get into their first home.
Yeah. They're scraping by. They just want to live somewhere.
Yeah, exactly. Right. Yeah. They can afford, they've got average credit, right? But I think the biggest deal is that, these people, other than the down payment assistance part and the closing cost part of it, they can afford to purchase a home, or they can manage the monthly payment.
Sure.
There's generally 2 options. So those are the programs in Colorado, but there's also national programs. Chinook are 2 programs that I'm familiar with that are national. There are, interestingly enough, down payment assistance programs that are funded by Native American tribes.
Yeah, that's right. I've heard of that.
Yeah. And so that's a really cool, option for folks to go after if you are eligible for it. But they generally fall into 2 buckets. There's either a forgivable grant, right, which is, hey, this is down payment, we're helping you out with this down payment and it's forgivable. If you stay in the home for X amount of months, then you don't have to worry about paying it back. It's generally the gist of it there. Then there are loans that sometimes are worth, you may be able to get more down payment assistance, but in that scenario, you do have to pay it back.
Oh,
right?
I see. So sometimes they're like wrapped into the loan.
Exactly.
Okay.
Exactly. So, it's a second mortgage that in some cases you don't have to pay back. In some cases you do. Paying it back would mean, you either pay it back into your monthly payment or it's due when you leave the property.
I see. Okay. Interesting.
Yeah. So several options there as far as down payment assistance goes. But in this scenario, again, you're getting your 3% down, up to 6% down is the most that I've seen with down payment assistance programs.
Dang, that's a lot.
That is so much.
Yeah. Wow.
But it also helps in those scenarios. A lot of times you're helping roll over some of that to closing costs as well.
Sure.
So generally with down payment assistance programs, you do have to have some amount of money on your own. Mm-hmm. So I know here in Colorado, it's $1,500. You've got to have $1,500 to contribute to the transaction of your own dollars.
Getting into a house for $1,500, that'd be crazy.
It's happened before.
Yeah,
it's
wow.
it's doable, right? So let's story time. If you are, let's say this was it's almost June right now, so call it 4 months ago. Let's say this was March 1st, and the market was kind of tough, right? So there wasn't many offers on the market, so you were getting seller concessions.
Yeah.
Right? So let's say a seller was willing to put up their home for sale, and they were going to pay for all of the closing costs. And you had a DPA program, Metro DPA or CHAFA, that was giving you, 4% down. So now you're taking an FHA loan. Now you've got your down payment paid for, your closing costs are paid for. Yeah. All you have to do is pay $1,500 for, maybe the appraisal and, some title work or something along those lines.
Maybe I need to take advantage of that.
Hey, I know a lender for you.
Cool.
I know an agent for you.
Yeah. If you find a good one, let me know.
But yeah, that's so that you can absolutely, and this is 2023, right? I just described a scenario that wasn't, like 1994 when Bill Clinton was president and, people were wearing baggy clothes and you know what I mean? No, this is a scenario that's very much possible in 2023, right? This is literally just a half a point in interest rates going up, and the market looks much more like it did then. Less offers, you're getting your seller concessions, you've got the down payment assistance. All you need is your $1,500.
Man, that's super helpful. So what about things that are specific to like the industry? Because I know these have been around for a long time, but particularly during COVID, I think first responders, frontline workers, nurses, teachers, like you had mentioned, they had started receiving their own programs. So what about some of those?
Yeah, absolutely. And so there are, talking about, or going back to the point of it is not as expensive as you think it is to get into your first home. So let's say you are a teacher and you've done the math, you've been looking at the market, and there you see some townhomes or some condos or something along those lines, and you're like, man, I think that I can afford that monthly payment. Mm-hmm. You see that monthly payment is comparable to what you're paying in rent, but you're having some trouble with the down payment. You're having some trouble coming up with the 3.5% to put down, and so now you reach out and you find that there's a down payment assistance program available for you. But then there's still a problem with some of the other cash that you need, right? Well, if you're a teacher, you can actually get a free appraisal, right? You would pay for the appraisal up front, and then you'd get a credit back at closing. Is the way most of these programs work. But based on the industry that you work in, you can absolutely get some discounts off of the purchase or off of your transaction. It's a lender by lender case, right? So this isn't something that is universal. It's for everybody. Yeah. This is much more of an overlay where the guys that sit at the big tables in the boardroom say, we've got to do something for teachers. teachers, or we've got to do something for our police officers or our firemen. And so they say we're going to make sure that we'll pay for appraisals, or we'll pay for inspections, things like that.
Yeah. Man, that's cool.
Yeah,
that's really cool.
Absolutely. I think there are tons of options and tons of deals for folks based off of the occupation or the industry that they work in. I think one of the biggest opportunities out there based off of the industry that you work in or have experience in is the VA loan.
Yeah. Absolutely.
I am passionate about this one because, this is a marginalized group here in America, and this is a loan that I think not enough people know a lot about. And so in some cases, people have negative, connotations with it. But to me, this is as good of a loan out there, man. I mean,
right. It doesn't get much better than a VA loan.
Yeah. So going back to, it is much cheaper to get into a home than you probably think it is. If you're a veteran, did you know that you could have 0% as your down payment?
Yeah.
I'm going to say that again. It's cheaper to get into a home than you think it is. So if you're a veteran, there's a chance that you could be required to have 0 down payment to purchase a home.
Yeah, and if you were to pair that with, like you'd mentioned, seller concessions, markets are going to fluctuate. So if you were in a position to do that, that could be getting into a house for, I don't even know how much, but it would be very little. Very,
very little.
And
very little.
I think you hit a really good point, is that people hear VA loans and they think like, oh, you get screwed over, or I don't really like the terms. But if you really get into the details, I mean, as you probably know, VA loans are some of the best loans you can get into as a borrower.
Yeah.
So, I mean, it's a great reward for those who have served our country. So if you have, thank you so much. We're just passing Memorial Day, so yeah, that's important to us.
Absolutely. I think it's really important to point out that it's also the part of the connotation there is that they may be like harder to close.
Yeah.
And that's simply not true.
It's not.
As far as like the inspections and the appraisals go, generally, if you can pass the inspection requirements aren't beyond anything else that you would like to live in.
They're very reasonable. They really are.
Very, very reasonable.
Yeah.
There's a few more papers to sign, but to a loan officer that cares about their client getting into the right home, it's not too much more to ask. To the agent that cares about getting their client into the right home, it's certainly not too much more to ask.
Yeah. And I was going to say there's one more thing that's different about a VA loan that's a huge advantage over any other FHA, conventional, whatever, is that when you get your appraisal back, I know this might be a little bit more advanced in topic, so we'll cover this later, but when you get your appraisal back, VA loans are the only ones that you can contest. It's called going to Tidewater. So I think that's really cool, and that's really important for those vets that are like, hey, I need to get into this home. What would you recommend? And if things were to go sideways, that's the one that you can fight. So that's good.
Yeah,
that's good.
That's really important to highlight. I think that, we're kind of talking high level, but, as a veteran, I think understanding that you have so many options out there, and there are so many things that, like I said, veterans are a marginalized group in this country, and so to be able to get into a home potentially with no down payment, you want to check with your lender, you want to go and look at your DD 214. But that option, you also have an option of, or you could potentially have no funding fee, which is similar to mortgage insurance. And to essentially, that's taking the monthly cost of this home lower for you. It could be anywhere from 3% to 10%, depending on what the funding fee could be. But to take that, to shave a few dollars off of your monthly payment, just goes back to, hey, it's a lot cheaper than you think it is to get into a home for a veteran.
Yeah, it's possible.
So far, we've been talking about how much cheaper it is to get, how much cheaper it is to get into a home from a cash perspective, right? But the next part is looking at things down the road. Right, so we obviously know that when you purchase a home, you don't cease to exist. You still have to exist for many, many years after that, and you'd like to have a few dollars in your pocket after that.
Yeah.
And so we've been talking about what it looks like, from a cash perspective up front, but as far as the down the road picture, I think that looking at a rent versus own analysis can really be helpful as far as what you're going to look at, like what your finances look like even a year later. We know that real estate appreciates at a 6% rate. Right, every year. So that means that if I purchase a home at $100,000, I can generally bet that it's going to be worth $106,000 that next year.
Yeah.
Right. Now, if you're renting, you could see your rent increase.
And you get nothing.
You get none of that, right?
Yeah.
So your apartment is worth, your apartment is worth maybe 5% more. You know what I'm saying? And so, maybe you're paying, slightly, like $1,050. Your rent starts out at $1,000. Maybe it's $1,050, right?
Yeah. We've seen some crazy rent increases recently. So
absolutely. Being conservative.
I was going to say it's not like typical since we've had a crazy hot housing market and rental market.
Yep.
But like your rent is really at the will of your landlord due to certain laws or some limitations, but like, man, it's you pretty much you pay whatever they charge you. And that, I don't know about you, that's kind of scary to me.
Yeah, that doesn't feel good, right?
Yeah, no.
And so you're looking at a 5% yearly increase in what you're paying out. So that's negative, right? That's a negative versus a 6% increase in what you're worth in just 1 year.
Yep.
So there's a difference there in how much cheaper it is to be getting into your first home. A lot of folks think that it's crazy expensive and it's just not for them. I've had a conversation similar to that in the barber shop this weekend, and the guy was just like, I don't know if it's for me. And it's like, well, if you plan on living in this area for the next 3 years and you can't afford it, you can pay your rent. If you're paying any amount in rent, then chances are you could probably swing a mortgage. So look into your options there and see and ultimately find out that a year later you're going to be up more than you are if you were renting.
Yeah, and that's what I tell people too is like if you're renting, obviously some people are in amazing situations like, I get to live for free and so buying a house would be expensive. Yeah, I guess that makes sense.
Yep.
But use that to save money and buy a house. But no, expectations-wise, when you go to buy a house, right, it's always the thought of like it's too expensive. We talked about the finances, but also sometimes when you're shopping with buyers, even when you're actively looking at houses, especially in a crazy market, they can start to think like, well, if I want everything I'm asking for, if I want the big windows, the mountain views, if I want like the 5 bedrooms and the 12.5 bathrooms, I'm like, hold on. And they're like, wait, and the pool. Then, it's just going to be kind of tough. I'm going to have to spend more than I want. And I'm like, hold on. Hold up right there.
Yep.
You don't want to be house poor. Nobody wants to be house poor. That sucks. Like, that's just the worst. I always tell people, like, if you can't feel comfortable going out that Friday to celebrate closing on your new house and have a nice dinner, then you probably spent too much money.
Yep.
And so pairing that with the, the financial aspect of, like, potentially getting into a place for $1,500, I just think about your expectations. Because, while getting into a house, like we said, your first house is probably going to be the hardest, and here's why. Because you don't have any equity from a previous house. Mm-hmm. When you're renting, you're spending money every month, and a lot of people, unfortunately, these days just aren't saving what they should.
Yeah.
So, kind of getting back to, like, what do I ultimately want? Because like you said, you build wealth when you have real estate. Even just your personal residence, not an investment property, nothing crazy. Over time, that house appreciates, and so does your net worth. And so looking at the house that you can reasonably afford, that works for you, may not be the perfect house, especially the first house. It's never going to be the perfect house.
No.
But the thing is, especially when it comes to rates, I hear that a lot. They're too high. Great. Buy it at a high rate while there's no competition or less competition. Refinance later.
Can I offer a bit of dating advice? Marry the house.
Date the rate.
Date the rate.
Yeah, and so, get into the place that you can afford and understand that it's probably not going to be your dream home. It's not going to have the 12.5 bathrooms. It's probably not going to have the pool, but you're getting into a place so that your next place can be a little bit closer, right? And the thing is, it's not permanent.
No,
right?
It's really not. When we say marry the house, you're really not even marrying the house. Well, I guess, divorce joke, like 50% of marriages ended into divorce here in America. So, but like in the sense that this is your first home is probably not your forever home. I think it's the point that you're saying here. It's the first home it's the home for that chapter of your life.
Exactly. I mean, when's the last time you rented the same place for 10 plus years? I mean, 5+ years, right? Think about that. So when it comes to buying and selling a home, there are costs and expenses. You don't want to be moving all the time, obviously. But I think the average is 7.5 years in a home. So can you imagine yourself in that home? We say even like 3 to 5 years.
Yeah, it's actually gone down to 3 to 5 years now. COVID has like thrown a lot of that data, but essentially what's happened is people are moving much more, and then also, again, going by chapters of your life, so you purchase your first home, maybe you just got married, or maybe you are dating someone that you think you could see a future with. Maybe it's a townhome. Then you move on to you have your first kid. Yeah. So, now you're in a townhome, or maybe that townhome doesn't work for you anymore. So now
you need the yard, need the privacy.
You need the yard, you need the privacy, right?
Yeah.
And then you get, you'd have, 2 more kids over the next 3-4 years, right? So now that 2-bedroom house or 3-bedroom home, that starter home that you had just doesn't fit anymore. So now you need 5 bedrooms. Yeah. Also, don't forget that you want to start a band because you're going through like a middle life crisis, and so you're going to pick up the bass or maybe even the drums to really get your wife going.
And we believe in you.
Yeah, we believe in you.
Really
you're definitely this mixtape is going to be hot fire.
But you're going to need your own garage for that.
Exactly. And so, and then sure enough, as you get through that part of life, one by one, your kids start going to college.
Yeah.
And
then
you
get that new job.
And you get that new or the mixtape is a huge success. Everybody loves it. You get asked to go on podcasts and all of that stuff. And so now, you've got all of this YouTube streaming revenue to use.
Yeah.
You got to get a YouTube house, right?
And now you can get the pool in the 13 bathrooms if you want.
I have exquisite taste, right? 13 bathrooms. But then after a while, you decide that the life, the tour life just isn't for you. Your kids have gone on and graduated, and now it's just you and your partner. Maybe it's time to go get a nice condo on a golf course.
Yeah, settling in, no maintenance. Who wants to cut grass?
Yeah, exactly. So that's 4 different homes.
Yeah.
That's 4 different chapters of your life. And granted, maybe one of them is in, you live in the YouTube house, the big mansion. Maybe you live in that one for about 10 years because you can't live without your water slide into the pool, right? But beyond that, that's still 3 to 5 years in every chapter of your life, until you're hitting your sunset years, and then you take out a reverse mortgage.
Yeah. Lots of options, man.
And lots of options, but those are several different choices for you as far as like what your home goes. So sorry to kind of spin off on a tangent there, but I mean, your first home isn't your forever home is the point.
Exactly, and that's it. So people always think like, I'm spending this much money, it's my first time, like it's gonna be forever, it's gonna be perfect. It's just not. I care about you. I want you to have realistic expectations, but those are the kinds of hard conversations we have to have with people, and just tell them up front, like, hey, it's not going to be perfect, but it's not going to be forever. So that's just life. One other thing I wrote down I wanted to mention is, it's going to be another tough one, but consider taking the time to save the money. I mean, maybe you just really aren't at that point where you're like, I'm not comfortable, even with these assistance programs, even with my expectations. That's fine. You need to sit down with yourself, look at where you can cut some spending, where you could make more money, where you could do whatever changes you have to do, because if purchasing a home is truly your goal and that's what you want, we're going to do anything in our power that we can to help you do that. But we also require your commitment to that. And we want to see you thrive. We want to make sure you're not house poor. We want to see you in that 12.5 bedroom. That's crazy. You know what? Shoot for it. 12.5 bedrooms. Why not?
I think you should. You deserve 12 bathrooms. I do believe there's a Lil Wayne lyric that we'd like to look up. I think it's like 8 bathrooms.
Came with an elevator.
Yeah, came with
There's that one. Yeah.
And 8 bathrooms. I can blank all day.
Yeah.
We'll let you fill in the blank.
Just get you the house that you want. get the house that you want. We're going to do what we have to. But hey, up front, these are just the conversations that we regularly have with our first-time home buyers. And we want you to know it's not going to be easy, but we're going to figure it out. Talk to us. We'll make it happen. We'll make it work. So
1,000%. I think that's the key, is that, you just got to understand, we'll figure out an option for you. We won't leave any stone unturned, but you do have to, and we will help you get to the place where you're qualified. Yeah. I talk to clients of mine all day long that aren't necessarily ready to purchase a home, but we get them the information that they need to make to take action to purchase a home. But you just got to be qualified, right? And
like bad credit, low funds, like whatever, like we can still work with that. It just may not be right now, but we're gonna help you along the way. We don't just close deals left and right. Like we do a lot of the supporting work to say, hey, maybe your credit's not where it should be for this program, for this house, but we're gonna walk alongside with you so that 6 months down the line, you're gonna have stellar credit. You can get that monthly payment that you want. Like we help you along the way. Like just because you may not be ready to buy yet doesn't mean it's not worth the conversation, because we want to help you prepare the whole time. Yeah,
and there's so much more, and you may be closer than you think. You may be further away than you think. I had a client who had great credit but didn't have the income, and so we just said, hey man, you need to stick around at your job for another year. From there, we'll be able to use this income, get you to this amount. From there, and he also had to manage his expectations as well. Yeah. His expectations were that, well, hey, I've been working pretty hard. I deserve a single family residence. And we had to make it, have a conversation to say, hey man, like I know you've been working really, really hard, but a single family residence in this market just isn't doable for you. Yeah. But if you take this townhome, live in it for 2 years, 3 years, this is what it's going to be worth. Yeah. So even if you don't make any more money, if you keep the same job that you have now, if we're just going to take that and then we're going to apply $100,000 down versus versus the 6 that you have, then you can get the single family residence, right? So it was a conversation where we started here and now we're here. As far as this borrower goes.
And you're getting closer. That reminds me of a story, actually. I had a couple of borrowers who were referred over to me, and they were looking. It was, this was like a month ago. This was not long ago. And it was a hot market again. They kept getting outbid. They kept seeing new homes. They kept falling in love and like losing out on them. And it was hard. Like they were in a solid financial situation too, which was even tougher, because it's like you see their hard work. You see, they should be able to get into this home in a normal market, but there's just so much competition. And so, it got to a point where the lender on the other side had sat down and like, real good guy, just sat down and told them like, hey, you guys to know, like after seeing all these houses, this is what you said you were comfortable with for monthly price, for monthly price, and then ultimately the total home cost. And here's where we're at now for what you're shopping for. You have shot up so much. So we just want to make sure that you set your expectations in the right place to let you know, like, hey, to get everything you want in this market, you're gonna have to pay this. But there's another house on the market that's been sitting. It checks all the boxes for everything that you need, but it's not got all of the wants necessarily.
Right.
And so having to go with the safer option, talk them down, get the expectations a little bit more realistic, and just say, hey, this is everything you said you needed. This is more realistic for you right now. And to help you stay within your financial goals, this is what I would recommend. And so they ended up doing that, closing on it, and some happy clients right there.
Yeah, that's it. I think that's I can give credit where credit's due. Game recognized game. That's a real lender. That's a good guy. That's a good lender, right? That can sit there and say, hey, look, like I'm worried that we've chased this dream a little bit too far, and at some point, when this is all over, how are we going to feel about it?
Right. Like 6 months down the line, are you still going to be happy with those payments that you said you didn't want to make?
Exactly. Versus like, hey, look, can we scale this back a little bit? And there's something to be said about our psyche, about getting a good deal. There's just knowing like, hey man, like those other guys over there, they may have overpaid for, that product over there, but this, they may have overpaid for that Louis Vuitton shirt, but this polo, this polo is solid
And 35% off.
You know what I mean? And you feel really good about it, right? And so you feel like you've gotten a deal. You feel like we call it a thank you and you're welcome moment, where you can say thank you for what you've given me, but I can also say you're welcome. Everybody feels like they walked away with their needs being met. So that's it.
That's it. So just to recap, I mean, consider utilizing a down payment assistance program. Industry-related discounts, nurse, frontline workers, police officer. If you are a veteran or active duty also applies, utilizing a VA loan. And we can create a rent versus own analysis to see what's best for you, see options to get you there, to get you what you want, or explore options for programs if we're not quite there. So with that, consider looking at homes that are the right home that you can afford versus the perfect dream home, if you will, especially for your first home. And then, dive deep into your finances, see where changes can or should be made. I know that's a tough one. Nobody likes talking about their money, so.
Yeah. But that being said, I'm Corey Martin. We are the Innovator, the Imitator, and the Idiot. I'm Corey Martin with Edge Home Finance. If you have any questions about personal finance, please don't hesitate to reach out to me.
Yeah, and I'm Kyle Wong with the Moxie Real Estate team here in Colorado. And of course, if you guys want to reach out, feel free. Schedule a call with us below. Thank you.
Thanks, guys.